What is intrinsic value in value investing and how is it calculated? Imagine you're looking at a stock and wondering if it's worth buying. You might see the current market price but ask yourself, what is this stock really worth? That's where intrinsic value comes into play. It's like finding the true worth of an asset based on what it can actually generate in the future, not just what people are willing to pay today. In value investing, knowing the intrinsic value helps you decide if a stock is a good deal. If the intrinsic value is higher than the current market price, the stock could be undervalued. That means it might be a smart long-term buy. If the intrinsic value is lower than the market price, it might be overvalued and riskier to buy. Calculating this value involves estimating how much money the company will make in the future. This is often done through a method called discounted cash flow analysis. First, you forecast the company's future cash flows, which are the actual amounts of money the business expects to generate over several years. Next, you choose a discount rate. This rate reflects how risky the investment is and what the opportunity cost is for putting your money into this company instead of elsewhere. Then, you discount each future cash flow back to its present value using that rate. This means you adjust the future amounts to today's dollars. Finally, you add up all these present values to get the total intrinsic value of the company. The formula looks like this. The sum of each future cash flow divided by 1 plus the discount rate raised to the power of the year number. Besides numbers, investors also look at qualitative factors. These include how strong the company's business model is, whether it has a competitive edge, and if its management team is capable. These factors can influence how sustainable the future cash flows are over the long term. Estimating intrinsic value involves some judgment because it depends on your assumptions about the future. Different investors might come up with different values based on their forecasts and risk tolerance. That's why it's important to do thorough research and be conservative with your estimates. For adults planning their investments, understanding intrinsic value helps build a solid long-term strategy. It encourages buying stocks below their true worth, which provides a margin of safety. This approach reduces the risk of losing money and increases the chances of earning good returns over time. It aligns with the core idea of value investing, which is to focus on the fundamentals and be patient, rather than reacting to short-term market changes.